Hello there, folks. Doc White coming to you from the recording studios in scenic Lytton Reeds. Our topic today, we're going to look at the tax situation for a married couple. It's a little bit more complicated than it was for the student example, but for this one we're going to fill out the Form 1040 and a few other schedules for Jethro and Abby Gibbs. Now, time for the legal blah, blah, blah. I'm not licensed to provide specific tax advice. Please get qualified assistance from a licensed tax professional for your specific questions. Getting ready to do your taxes, your starting point is gathering your information. Throughout the year, anytime you get an envelope or an email that says important tax forms, let's file those things in the same folder. The main tax records you're going to get are a W-2, which you will get from each of your employers. This shows how much income you earned and how much they withheld for Social Security, Medicare, state, and local income taxes. If you earned income from other sources, you might get a 1099. Any interest you earned on your checking or savings accounts, your certificates of deposits or CDs, or any bonds or bond mutual funds, you should get a 1099 INT that lists how much interest you were paid and how much they withheld in taxes. If you own stocks and you were paid dividends throughout the year, you should get a 1099 DIV from the investment company, and this will show how much dividends you were paid and how much tax was withheld. And if you worked for somebody but they didn't actually hire you as an employee, they treated you more like a contractor, you might get a 1099 MISC for miscellaneous income. In filling out your 1040, start at the top and work your way down line by line. Do not skip ahead because you'll have to come back and make a lot of changes to your previous numbers, so work one line at a time. As you enter information off of your supporting records, like your W-2s and your 1099s and so on, let's put them back in the folder when you're finished with them and keep all of your tax records together. Old Doc White says let's keep these things for 3 to 7 years. And I'm going to say, you know what? Let's make digital copies and keep them forever. It doesn't take up much disk space for you. So, for a married couple example, let's look at Jethro and Abby Gibbs and their 20-year-old son, Tony. Tony is a full-time student, so Jethro and Abby can still claim him as a dependent. They have chosen the married filing jointly filing status, and because of their situation, they need to fill out the Form 1040, the Schedule 1 to show other income or adjustments to income, Schedule A, which allows them to itemize deductions to see if they can save more in taxes, and Schedule 3 deals with tax credits and other taxes. We're going to skip over Schedule 3. I'll just give you the numbers you need to know. So to fill out your 1040, the top line is your filing status. So Jethro and Abby have chosen married filing jointly. We've listed their names and address. It doesn't matter who you list first, Jethro or Abby, just pick one and go. And make sure you have the proper Social Security numbers listed. Again, don't use a P.O. box, use a street address, otherwise the IRS is going to get ticked off at you, and you just don't want that. In the bottom right-hand corner of the box that I've highlighted here, you'll see the presidential election campaign checkboxes. You can check none of them, one or both. If you do, $3 per person will go towards the presidential election campaign. If you don't, the $3 is going to go somewhere else. So it's not going to have an impact on your tax refund or the amount of taxes you owe. The next section of the 1040 is your standard deduction line and where we list our dependents. In this box, for Jethro and Abby, no one else can claim them as a dependent, so we're not going to check either of those top two boxes. The spouse is not itemizing a separate return, so we don't need to check that box. And neither one are over age 65 or blind, so we're not going to check those boxes. If they were, you'd check the appropriate box. For your dependents, we're going to list anyone that we can claim as a dependent. And again, look at the instructions for the 1040 to see who qualifies. But they can claim Tony, so list his first and last name, his Social Security number, and his relationship to you. The other two columns deal with whether you get a tax credit for this person. We're not going to go there. We're just going to leave that blank for now. The next section of your 1040 asks you for your incomes from all different areas. Because Jethro and Abby are filing jointly, they're going to combine their numbers. So we're going to take Jethro's income and add it to Abby's, and they came up with $145,000 of W-2 income. Throughout the year, they earn $1,500 of tax-exempt interest. Again, this is primarily from municipal bonds. Taxable interest, they got $500 from their checking, savings, CDs, and so on. They were paid $1,000 of ordinary dividends from the stocks that they own. And Jethro chases bad guys out of the neighborhood and gets paid $3,000. So he has other income of $3,000. So you can see where we're going to input this information onto the 1040. So let's just show you. On your 1040, line 1 is your wages, salaries, and tips. This is where you're going to list all the income you earn from your W-2s and your 1099s. For Jethro and Abby combined, this was $145,000. They earned $1,500 of tax-exempt interest, again from municipal bonds. We're going to put that on line 2A. That number does not come into any other calculation on the 1040. The $500 of taxable interest they earned from their checking account goes on line 2B. They didn't have any qualified dividends. We can leave that line blank. The $1,000 of ordinary dividends they earned goes on line 3B. For Jethro and Abby, we don't have to worry about lines 4, 5, and 6. Line 4 deals with money they have taken out of their retirement accounts. Well, they're still working. They haven't retired, so those are just zeros. Line 5A is for Social Security benefits. Again, they're still working. They haven't started collecting Social Security benefits, so we're going to leave them blank. And line 6 would be capital gains or losses on the sale of some of their investments. So if they sold stocks for a higher price than they purchased them, they will get a capital gain, and we'll have to count that as income. If they sold stocks for a lower price than they purchased them, that can be a capital loss, and this can actually help reduce the amount of taxes we owe. Let's keep it simple and assume they had nothing. They sold no stocks or bonds throughout the year. Line 7A, we're looking at other income, and it says from Schedule 1, line 9. So if we pop over to Schedule 1, you'll see we have Jethro and Abby's name at the top, and we have Abby's Social Security listed. We're going to stay consistent and use that for every form. The additional income, if we get state and local income tax refunds or credits, a portion of that may be taxable, so we'd list that on line 1. Any alimony that you received could be taxable, so that's going to go on line 2. Income from business, rental properties, farms, and other gains or losses goes on lines 3 through 6. Any unemployment compensation you were paid throughout the year goes on line 7. And then on line 8, this is where we'll list Jethro's $3,000 for chasing bad guys out of the neighborhood. Line 9 says let's just add up what's on lines 1 through 8. It says clearly enter it here and on Form 1040, line 7A. So if we go back to line 7A on the 1040, you'll see we've listed the $3,000 there. Line 7B says let's calculate your total income for the entire year for all parties combined, so for both Jethro and Abby. For this one, we're going to add all of the numbers that are on the right-hand side of the tax form. The numbers in the middle on line 2A, 3A, 4A, 4C, and 5A, we are not going to add them into this number, so just ignore them from now on. We're just going to use line 1, 2B, 3B, 4B, 4D, 5B, line 6, and line 7A, and you'll see for Jethro and Abby, their total income for the year was $149,500. Now, we won't be taxed on that because the IRS lets us reduce our income by using adjustments and deductions. The main adjustments you have are listed on the bottom of Schedule 1. So if you're a teacher from kindergarten through grade 12 and you're paying money out of pocket for supplies, we can write them off as adjustments. If you made additions into your health savings account, we can include this as an adjustment. We'll talk more about those health savings accounts in the health insurance module. If you're in the military and you had moving expenses related to deployment and training and so on, we can adjust our income for those. If you're running your own business, we can have self-employment deductions. And then if we're paying alimony, that's an adjustment to our income as well. None of those apply to Jethro and Abby, so we can ignore them. But the last three on Schedule 1 do apply to Jethro and Abby. The IRA deduction on line 19 of Schedule 1 is only for traditional IRA contributions, money you put into a traditional IRA. This does not include anything that you put into a Roth IRA. If you made a Roth contribution, it has no impact on your taxes. It does not go on the 1040 anywhere. But if you made a traditional IRA contribution, we can write it there on line 19. Because they claim Tony as a dependent, we can write off the student loan interest that we paid throughout the year. There's a worksheet to help us figure out how much we can actually deduct. And then we have the option of either writing off the tuition and fees that we paid throughout the year, or using an education tax credit like we talked about earlier. The choice here is simple. Choose the one that gives you the biggest tax savings. If we have $2,000 of tuition and fees and we're in the 20% tax bracket, that means by including the $2,000 as an adjustment, it will save us $400 in taxes. How'd I get that? $2,000 in tuition times 20% gives me $400. However, if I get a $1,000 tax credit, that's going to reduce my taxes by $1,000. So in this case, we're not going to use the tuition and fees. We'll talk about that here in a bit. So the adjustments for Jethro and Abby, they both made contributions to their IRAs, $7,000 for Jethro, $7,000 for Abby. But you're saying, wait, Doc, I thought you could only put $6,000 into a traditional IRA. Well, that's true, but if you're over age 50, there's an extra $1,000 that you can put in. So both Jethro and Abby put $7,000 each into their individual IRAs. For the student loan interest they paid throughout the year, they paid $29.20, but as we work through the worksheet in the instruction manual for the 1040, turns out we can only deduct $720 of that student loan interest against our income. For the tuition and fees paid for Tony's education, they paid $15,000, but as we work through the tax forms and the instructions, it tells us we can only deduct $2,000. Again, that $2,000, if we're in the 20% tax bracket, is only going to save us $400. If we get more than $400 in tax credits for education, we're going to leave this line blank and we're going to use the tax credit. So for Jethro and Abby, on line 19, we're going to put the $14,000 of IRA contributions. Okay, it's called an IRA deduction, but this means we can deduct this from our income. Line 20 is for the student loan interest. In this case, we can only write off the $720 of interest. And line 21, we've decided to leave that blank. We're going to use the education tax credit because it gives us more tax savings. Line 22, we're going to just add up from line 10 to 21, and Jethro and Abby come up with $14,720 of adjustments to their income. So we're just going to transfer this number directly over to line 8A on your 1040. Line 8B is an important one. This is where we're going to calculate your adjusted gross income. And adjusted gross income is an important number. We use this to determine your Social Security benefits and any benefits you're getting from other government programs. All it is your total income minus these adjustments we just made on Schedule 1. So to calculate line 8B, we're just going to take line 7B, your total income, and subtract off line 8A. For Jethro and Abby, we have $149,500 on line 7B. We have $14,720 that we're going to subtract from that number. So our adjusted gross income is $134,780. Now the government says, you know what, we're kind, we are beneficial, we want to help you. So they give you the option on line 9 of using either your standard deduction, or if you have a special tax situation, we can itemize our deductions. The bottom line is we're going to use whichever one is the largest. Remember, for Alexa, the student, the standard deduction was $12,200. For Jethro and Abby, they're married filing jointly, so their standard deduction is $24,400. If we look at Schedule A, we can figure out if we should itemize our deductions or if we should take that standard deduction. We'll walk you through the Schedule A. But the main things that you can itemize are medical and dental expenses that you paid out of pocket and were not reimbursed by your health insurance plan. Any state and local taxes that you paid. This is income taxes and property taxes. Property taxes are for your house, for your land, and in Virginia we have a car tax, so that's considered a property tax. We can also itemize the interest we pay on our home mortgage. There's a couple other types of interest in there, but the main one for most people is the mortgage interest. And we can itemize any gifts we made to recognize charities. There are some other things we can itemize that typically don't show up. Any casualty or theft losses, or if you were in an accident and the insurance benefits you got don't cover the amount of the loss, we can write off that extra portion. And there's some other things on there, but those are the main ones. For Jethro and Abby, they had total medical expenses of $20,000 throughout the year. This is for any prescription drugs or eyeglasses or contact lens solutions or any procedures or lab tests that they had to pay out of pocket and they were not reimbursed by their health insurance. They paid $1,500 in state and local income taxes, $5,000 of real estate or property taxes, $8,000 of home mortgage interest, and they made $2,000 worth of charitable contributions throughout the year. So here's how we enter this on the Schedule A. Again, put your name and social security number at the top, stay consistent. For our medical expenses on line 1, we're going to put $20,000. And we need to sort of have the receipts to back up these claims. So keep your insurance records, keep your receipts when you pay for any medical expenses. For line 2, we're going to enter the number from line 8B on the 1040 form. This is our adjusted gross income. This is why we can't work ahead and skip sections of the 1040. We need to work everything in order. So $134,780 is our adjusted gross income. Line 3 says let's multiply that by 7.5% or 0.075. That gives us $10,109. Now then, for your medical and dental expenses, we cannot write off the entire $20,000 of expenses. We can only write off the amount that is over 7.5% of your adjusted gross income. So we're going to take line 1 of $20,000. We're going to subtract off line 3, the $10,109, and this says that we can itemize or write off on our taxable income $9,892 worth of medical expenses. For the taxes that we paid $1,500 in state and local income taxes. We paid $5,000 of real estate taxes. Personal property taxes, that would again be like a car tax or something like that. Line 5D says add lines 5A through 5C, so that gives us $6,500. Line E says take the smaller of line 5D or $10,000. In this case, the $6,500 is less than $10,000, so we're going to put the $6,500 on line 5E. We don't have any other taxes, so line 7 says add lines 5E and 6, so the total amount that we can use to reduce our taxable income is $6,500 for our taxes. For our interest payments, we're just going to deal with interest on your home mortgage here. So we have line 8A has the $8,000 of home mortgage interest that we paid throughout the year. You'll get a Form 1098, which clearly shows how much interest you paid your lenders throughout the year. There are some other things we include in here, but let's just keep it simple. So we add lines 8A through 8D. So line 8E is $8,000. We don't have any investment interest. This would be interest we paid on any money we borrowed to make an investment. Let's just ignore that one. So line 10 is nothing more than adding lines 8E and 9. So there's another $8,000 that we can use to reduce our taxable income. For gifts to charity, we can write off any gifts we made to a recognized charity. Line 11 says gifts by cash or check. If you made a gift of $250 or more, see the instructions. Folks, that's if you wrote any check at any time throughout the year for a charitable contribution that was $250 or more, we need to fill out a separate form. But let's say that you want to make a contribution of $30 a month to your local church. Well, $30 a month times 12 months is $360, but each check that you wrote or each cash donation you made was less than $250, so we don't have to fill out that form. So in this case, Jethro and Abby made $2,000 worth of charitable contributions, but none of those at any one point in time was greater than $250. So our total gifts to charity were $2,000. We're going to ignore the casualty and theft losses and other itemized deductions. So our total itemized deductions, we're just going to total up everything in the right-hand column, and it comes up to $26,392. Now then, remember the rule. You want to use the larger of your itemized deductions or your standard deductions. The standard deduction for married filing jointly is $24,400. For their itemized deductions, it was $26,392. So we're going to use the larger of the two. So always, always, always use the larger of the two. Let's ignore line 10. That's for business credits. For line 11A, we're simply going to add lines 9 and 10. So there's our $26,392. Line 11B is our taxable income. This is the amount we're going to use to calculate our taxes. So we're going to take line 8B, which is our adjusted gross income, and we're going to subtract from that line 11A. So in this case, our adjusted gross income was $134,780. We're subtracting off our itemized deductions of $26,392, and that gives us $108,388. So that is the number we're going to put at the very bottom of page 1 of the 1040. Folks, throughout the year, if you look at line 7B, their total income was $149,500, but they're only going to have to pay taxes on $108,388. That's pretty cool, okay? So again, you're not taxed on every dollar you earn. Because of the adjustments and the deductions, we can reduce our taxable income. Now we're going to calculate our tax on line 12A the same way we've done in the past. We can use the tax tables in the instructions, or we can use the tax rate schedule. I'm going to show you the tax rate schedule again. So in this case, we're going to use Schedule Y-1. This is the second box on the tax rate schedule. This is for married filing jointly. We're going to scroll down until we find the range that contains our taxable income of $108,388, and you'll see that's on the third line. It falls between $78,950 and $168,400. So our tax is going to be $9,086 plus 22% of the amount of that our taxable income is over $78,950. So we're going to take the $108,388, subtract off the $78,950. We're going to multiply that by the 22% or 0.22 and add that result to $9,086. And this says that Jethro and Abby's tax liability, the amount they owe in taxes this year, is $15,562. We're going to list that on line 12A. Line 12B is where we'll list any other taxes we might have. This would be self-employment taxes, or if we hired domestic workers, we're supposed to pay taxes on their earnings. In this case, it's 0. So line 12B is just going to be line 12A plus 0, or $15,562. Line 13B is for the education credit they are claiming for Tony. And this number would be written on Schedule 3. We're skipping that one here today. So just take me at my word, the $1,500 is going to go on line 13B. For line 14, just follow the instructions. Subtract line 13B from line 12B. If it's 0 or less, just put in 0. In this case, we're going to take the $15,562, subtract off $1,500 for that tax credit. Remember, a $1,500 tax credit reduces our taxes by $1,500 directly. So line 14 is $14,062. So line 15 doesn't apply to Jethro and Abby, so we'll leave it 0. Line 16 is your total tax, where we're just going to add lines 14 and 15. So our total tax is $14,062. To get line 17, your federal income tax withheld throughout the year, This number comes from your W-2 and your 1099 form. Form W-2 and your 1099 forms clearly show how much federal and state income tax was withheld. So we're just going to use the federal income tax withheld. For Jethro and Abby, it was $10,000. So line 17, we're going to put $10,000. For lines 18, A through E, we're going to list any other tax credits that we might get. And in this case, Jethro and Abby were able to claim an extra $1,000 in the educational tax credit for Tony. This reduces their income tax by an additional $1,000. So they had the choice of writing off $2,000 as an adjustment. Since they're in the 22% tax bracket, that would save them $440 in taxes. But by taking the educational credits, they've reduced their taxes by $2,500. So let's take the tax credits instead of writing off the tuition and fees. So we have this line 17, which is the total income tax withheld. That comes from your W-2. On line 18C, we're going to list the $1,000 of tax credit. And again, we're not going to deal with the form that it mentions there. Take my word for it. Line 80 looks at our total tax credits. So we're going to add up lines 18A through 18D. That's an extra $1,000. So line 19 is our total payments that we've made. So we're going to take line 17, the amount that was withheld, add to it the amount from 18E. So for Jethro and Abby, this is going to be $11,000. Now then, let's think about this. Their total tax on line 16 is $14,062. They have paid, through withholdings and tax credits, they have paid $11,000. So it looks like they're not going to get a refund. It looks like they're going to have to pay a little bit more in taxes. So how do we calculate this? We go to line 20, and it says if line 19 is greater than line 16, well, line 19 is $11,000, line 16 is $14,000, so this doesn't apply. So we do not get a refund. So we can leave line 20 through 22 blank. For line 23, it says subtract line 19 from line 16. So line 16 is $14,062. Line 19 is our $11,000. So this tells us we will have to write a check for an additional $3,062 to pay off all of the federal income taxes that we owe. So we're leaving lines 20 through 22 blank because we do not get a refund. On line 23, we're taking line 16, the taxes we owe, minus line 19, the amount we have paid. So for Jethro and Abby, they need to write a check for $3,062. Next thing we need to do is sign the return and file it. Both Jethro and Abby would sign the form, put the date on there, put their occupation. If they paid someone to do their taxes for them, they would be listed under the paid preparer. Folks, there's the taxes for a married couple. They will be submitting all of these forms, the 1040, including their W-2s, Schedule 1, Schedule A, Schedule 3, we didn't go over that, but that's where that education tax credit comes in. They'll take all of these forms and either file them electronically or mail them to the address that's listed in the instructions. Well, folks, that's all I really want to say about taxes. If you can work through a tax form, do it line by line. When you get stuck, read the instructions. They have plenty of examples in there. It should help you get through the forms. If they don't, go to irs.gov, and they have a list of frequently asked questions. They also have a hotline, so you can email or call in and get a specific tax question answered. Well, I'm done. Folks, stay safe, stay happy. We'll talk to you later.